evening, all. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for the evening of Tuesday, the 24th of September, 2024. All right, my friends, as we take a look at the markets, we walked in this morning to China releasing their bazooka of stimulus, all kinds of interest rate cuts, promises that they're going to buy stock to support the market, lowering of a second home initial deposit number, and more to come. Even another reserve ratio by the banks down, and they're going to do another one, they said, by the end of the year. Well, it's a good start. They'll have to do more because what they have to do is not prop the stock markets up in that. They've got to get the consumer to believe that they, the government, have the consumers back. They're trying desperately in China to become a consumer-driven society, similar to the United States, if you think about it. I mean, we've been the standout because we buy our products, we keep spending our money. We do imports, don't get me wrong. We import what we have to import, but we're really got our energy, we've got a consumer that is always buying. Well, they, I think, would like to have that, but they're not going to get the energy. They're always going to have to buy it from abroad or take over a land that has it. That's the simple reality of the situation. So today you heard that. The gold market took off nearly to $2,700 now. The silver said, you're not leaving me behind. If China's going to do things like that, what's going to happen is what? They're going to need iron ore, copper, silver, all these things to get the factories going. So you're back into the 450s in copper, $32.50, just like that. Came out in left field. When we take a look at the dollar, it fell down. It's very close to getting under the 100 level. You know, I have lower targets than that, probably back 97, 98. I'll bring those out shortly. In the euro, taking off again tonight. And I think one of the sleepers was the Swiss franc, where I was telling clients to go with the market into that today. Maybe I'll get right. It's hard to know. As for the energies, a big rally. You're back up in Brent, think about it, to $75. Now, we're going to be switching over to December in this now. And in the crude, you're sitting here in the American crude back at the 72 level. I don't know why we haven't heard from our energy secretary that she's buying more oil. Where's those tenders? I mean, are you waiting for it to go back to 80? I don't think that would be the brightest move. When you look at bonds, right through the whole curve yield, they have been coming down as interest rates have actually been going higher. But before I get into the charts, Mortgage Bankers Association will have their weekly market numbers tomorrow. As interest rates have now, after the Fed move, they've actually climbed again, and mortgages are up again to about 6.2%. New home sales data for August will come out at 9. We saw KB Homes come out today. Not a pretty sight. The market was sharply lower in aftermarket. I'll find out if it was kept that down. And in the API numbers, remember, we're going to get the EIA numbers at 9 in the morning. They were down sharply, 4.3 millions, down 3.4 and 1.1. In my report tonight for my clients, I review this, I review the EIA estimate and what China did in great detail. So, you know, if you want to get my reports, right at the end of this, there's a free offer where you can go to the website and take a look and see if you haven't seen them and what I write about. I'm not going to bury you in a lot of information. I'm going to pinpoint, use a lot of graphics, and take you into a direction I want you to look at. Similar to what I said when people didn't believe me, I thought gold was going to take off. And I think silver, as you heard me say, I thought it was going back to at least 33. I'm only 50 cents away in my analysis from there. In the weekly chart of gold, if we were to finish right here, you're at an all-time high. But we're not going to finish here. This is Wednesday. We've still got Wednesday to finish, Thursday and Friday. The market is lifted off. It's gotten a thrust and then a twin turbo behind it. It got the Federal Reserve cutting 50 basis points, and there are huge bets going on right now as to whether or not in November it'll be another 50 or 25. If you watch the CME Fed Watch page, go to that, you can see what's going on. But you can see how the market has come up. The pattern has been one of higher lows, higher highs, bullish. The market fought its battle at the 18-day average. We talk about that so often that that's the determining point often on charts, and the market has taken off. Now, for those of you not in the market and want to come in, often this pattern will give you a correction down the road. It did it back here if you take a look. It did it back here. I don't know why it shows up or when it shows up. Nobody does. I mean, that's how you'd become instantly rich, right? All you got to do is bet your house there. The market's going to drop back to the 18-day, and away you go. Well, I do believe that'll happen again. So if you've missed this boat, I think there'll be another one. I'm still targeting the $3,000 mark that can happen later this year and next year, because I'm not seeing, and I've said it repeatedly here, that inflation number fall away. You are riding the Bollinger Band. You have an embedded reading. The first hard breaks, I think, will end up being bought by the trade. But if you lose the embedded reading, wherever the 18-day average is, could be where the market's going. But I'd bet it's probably closer to 2,600 than you think. When we look at the gold-silver ratio, as we were getting a correction, they just pulled the plug on it. I mean, it didn't give you any warning. A lot of times it does. We didn't get it. So you've now gone in this market from near the, let's call it 87 level, all the way to 82.5, about 5 ounces of silver and less to get an ounce of gold. In the silver, you can see how the market, first, it had an outside day to the downside. You took out that high. What's the signal? Have you taken my outside day course? Classic, what I teach. Until you take out that low, if you take out the high on an outside day, the odds favor you're going to go to the closest moving average or Bollinger Band. You hit that today. In the copper market, came down, playing a game, back and forth here. Now, you've stayed over the 100-day average in that. You're embedding as well. On the way back down, we'll have to find out where the support's going to be in the market. But I seriously doubt if China's throwing all this energy at the market that you're going to revisit this $4 level in the near term. In the platinum, it's not as good as everything else. So you've got lower highs, lower lows. Just yesterday we were talking, you've come down here on the way back up. Maybe the 100-day average would be some resistance. You got under the 2. You had to clear that. You opened steady, you cleared it, and you went there and you stalled for the moment, and you are overbought. In the dollar, I wouldn't be surprised tonight, that you're challenging the 100 level and try to get under it. And the question is, can you stay under it? But in the end, I think you're going down lower in the markets here. So the question is, can you get short? Well, if you're not in already, off the daily chart, you got to look at the weekly chart. That's been the sneak play, looking at the weekly with this, because now you're oversold. So if you're not in, you might have missed it. I got lucky on this one, but I was wrong in soy meal yesterday. You get handed every time you think you got a hot hand, you get handed one of those losers that set you back. It happens, and that's what trading is about. So, as I said, if you'd like to get my newsletters where I cover the grains, the meats, I cover the futures markets and metals, I cover the stock indices, interest rates, a lot of currency trade. Currencies are one of my favorite because of the biggest market in the world. You can get caught if governments catch you off guard, and inevitably that's part of it. You can get caught if you go through reports and there could be some change, and I try not to do that in these markets. Generally, central bankers telegraph what they're going to do, but not always. You have to decide which report's important. So we cover that with our written commentary, the futures videos, special reports. I write like that. Bullet points, ideas, charts galore, recommendations coming out, a lot of graphs that I'll use during a week to give you ideas. The idea is I have written so many and read so many newsletters over my 50 years in this business. The one thing you don't want to do is get a writer that keeps putting out report after report. They're 7 to 10 pages long. And when you really look at them, they keep saying the same thing. I'd rather write a shorter report that doesn't. My report is meant that you can digest it really in about a minute or two. That's all I wanted to take. If it's longer, I've not done my job the right way. You can read it on the QT mobile that we can give you access to, free. It's a mobile app that covers everything. I was today looking for a special report. I still am. I intend on doing another one either tomorrow or Thursday, so be ready for that. Just go to iraepstein.com research or move your cursor to the top up here. There'll be an icon. It'll take you there. Or you can go to free offers. Your call. Which way do you want to go with it? I'm Ira. You have a great evening.